Hello guys, welcome in today's crypto technical analysis. I believe it's time to update the market after a week. We do a multiple time frame analysis for BTC, and as I promised, we're going to look into an equity market, ES. However, before we start, I've got a small request as usual. If you guys are learning and enjoying from the content, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. Let's start analyzing from BTC. Based on a weekly time frame, the levels are not changed. You've got the first resistance zone, it's going to be around $30,000 all the way up to $36,500. Without claiming this level, it's going to be, as I said earlier, to talk about the consolidation. The weekly time frame will get back to the consolidation level. As I said, I'm not paying too much attention. We've got other levels based on a lower time frame than weekly time frame, and as expected, $25,000 was a perfect rejection zone and exit zone if you entered from lower levels. But I want to draw your attention on these two bullish engulfing candles that we printed on the 18th of July and as well as on the 8th of August. So as you can see, price was struggling to go up. Slowly we moved up. However, last week we had another bearish engulfing candle, and that wiped off previous 3 weeks candle. And then the last week's candle, which we closed yesterday, that was another brutal candle. That 2 weeks candle wiped off since we went uptrend from the 11th of July. If you're in a bear market, to go up, it's going to be very slow. However, the dump is going to be quite hard. It doesn't matter whether it's a high time frame or lower time frames. Moving on to a daily time frame. Based on a daily time frame, 26th of November, that was $60,000, $59,500 was a strong support. Once we broke this support, tested to the dollar, and we saw first leg down, a bit of consolidation in here, and then the second leg down. However, at this stage, we're a bit consolidating based on a higher time frame. And as I said, $25,000 was an extremely important level. If you managed to exit from $60,000 based on a higher time frame, we saw 70%, which is a massive dump in the market. And again, I warned you again and again when we approached to $25,000, there is no need to panic. You're still profitable 60%. if you manage to exit from $60,000. And as expected, we saw another leg down from $25,000. So with the current price action, you are by, if you manage to exit from $60,000, you are in profit 65%. So, however, based on a lower time frame, that was a perfect signal. $25,000 was a higher time frame resistance. And from $25,000, again, we saw massive dump, which is another 22% plus dump in the market with the current price action, 20% dump in the market. And as I said, there is no need to panic based on a daily time frame. The daily time frame is still heavily under the bear's control. As I mentioned, $23,000 and $22,000 was extremely important for daily time frame. Once we broke, we exited from consolidation and we went back under the bear's control. So again, the similar levels are applicable. Without claiming $23,000, it's going to be early for us to talk about that daily time frame. We'll get back to the consolidation level. However, we need to look into a lower time frame in order to analyze further. Moving on to 4-hour time frame. Based on the 4-hour time frame, I recently shared that we held the first time, second time. However, this is the third time. I'm expecting that we're not going to hold. And as expected, perfectly, we broke it, retested it to the dollar, and we had rejection. And that was expected, actually. As soon as we got rejection right from $25,200, $25,000 resistance, provided weeks in advance, $24,800 all the way up to $25,000. That was your initial exit signal. However, once we lost $23,500, $23,000, that was your second exit signal based on a mid-time frame if you managed to take a long from $21,000 all the way up to $21,500. The recent longs, we entered from $21,000, $21,500. We saw massive pump, which is a up to 18% pump in the market. If you exited from $23,000, $23,500, you exited with a 10% profit. Bear in your mind, in a bear market, uptrend provides you less profit when it goes up. However, downtrend, as you can see, we struggled over 1 month to go all the way up to $25,000, and that provided 18%. If we're calculating from the local bottom, that was 32% in over a month. However, from the top, in few days, that as you can see already, we dumped so quickly 22%. And as I said, there is no reason if you manage to exit from the market with a $24,800, $25,000, we saw massive dump, which is a 20% plus dump in the market. And also, $23,000 was given in advance again. That was based on a 4-hour time frame. If you trade it, that's already 15% dump in the market. With the current price action, you're up by 13%. And there is no need to panic and exit from the market. 4-hour time frame still under the bear's control. And as you can see, that's the daily time frame resistance. First time rejection to the dollar, second time rejection, and a number of times rejection right from inside the resistance box. However, we had an SFP and then started dumping all the way up to the first level was I provided. That was your first target was 0.618, the golden pocket. That was already ticked, that we reached our target level. And the second target level was 20,000 all the way up to 19,300 level, which I mentioned in the previous videos. So we reached both of our targets. And as I said, the market provided from 24,800 all the way to 0.618. That was 15% dump. However, with a second target, that is, as I said, 21% plus dump in the market. Recently, once the price action was around here, even yesterday, I saw that the market expected that we're going to go all the way up to 23,000, all the way up to 23,500. However, if we managed to break $23,000, that was another trend change based on a 4-hour time frame. I wasn't expecting that. I was riding the trend actually once we started exited from $24,500, $25,000. So at the moment, the crucial and important level, as long as we stay above 20,100, 20,200 level, the important level based on a 4-hour time frame is going to be, based on a mid and lower time frame, is going to be 20,700 all the way up to 21,200 levels. Without breaking these levels, it's going to be early for us to talk about 4-hour. We'll get back into the consolidation level. However, bullish scenario based on a 4-hour time frame is going to be 22,500. Without claiming 22,500, 300 levels, it's going to be early for us to talk about the bullish scenario based on a 4-hour time frame, which I'm not expecting at this stage. Highly likely we're going to see a rejection from this level, and we will be testing not only this support level, which is at 19,300. However, I'm expecting at slight lower levels that the previous lows will be taken based on a higher time frame Fibonacci levels, which I shared in the previous videos. So 4-hour time frame, as I said, heavily under the bear's control. If you manage to exit and short it, there is no need to panic at this stage. 2-hour time frame. Based on a 2-hour time frame, in the coming 48 to 72 hours, if we're going to break $20,800, $21,000, staying above, then 2-hour will get back into under the bull's control. However, I'm not giving too much weight. Even if we see such a scenario, I will be interpreting that as a fake out. So 1-hour time frame is heavily under the bear's control. I'm not going to cover in this episode. Recently, I shared that the ES on low and mid time frames, currently we're at a resistance. That once we started approaching to the resistance, I warned you. So I'm expecting a rejection, and target 1 and number 2 is going to be support number 1 as well as the support number 2. At this stage, as I said, ignore the last line of defense. However, as I said, that was a perfect signal as expected. For those who look confluence with the equity market, that was a good setup for you, and we got rejection right from the local resistance. First target level, and we were expecting to come to all the way up to second target level. And that was a decent dump in the market. Right from the resistance, we saw all the way up to this support number 2, over 4% dump in the market. So we can replace with a tick icon, which we ticked both of the support levels and we reached to our target level. As long as we're going to be below the support number 1, which is 4,160, the 4-hour will remain under the bear's control. So at this stage, 4-hour as well as the 2-hour timeframes are heavily under the bear's control. And if we're going to get a rejection based on a lower time frame, 2-hour time frame, if we see a rejection around 4,115, 4,100 levels, highly likely, then we're going to test the last line of defense. At this stage, without claiming 4,100, it's going to be early for us to talk about $4,160. Claiming that as a support, which these are acting as a resistance at this stage, these target levels, then we have higher levels above us. It is, as I said, early for us to talk about these levels at this stage. So based on a mid and higher time frames, The first resistance that we're going to be facing, 4,080 all the way up to $4,100. So the next level is going to be, as I said, 4,130 all the way up to $4,160. Without claiming this green line as a support, it's going to be early for us to talk about $4,130. However, I'm expecting in the coming days, if we're going to see a pump in the market, this level shouldn't be an issue, and we can go all the way up to this support number 1, which is acting as a resistance, and we might see a rejection, and the price action will send all the way up to this last line of defense. We came to an end of this episode. If you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I'll see you in the next one.